Hey guys, a very warm welcome to my channel. In this video, we are going to talk about a company called Root Mobile. So this stock has created a lot of wealth for its initial shareholders, but for the recent entrants who have entered at the top, it has been a painful journey in the last one and a half year. So we are going to understand the business model of the company and why the stock has fallen, and we'll try to discuss what should the existing investors do in the company. So before we begin, if you're new to the channel, please to subscribe and hit the bell icon to get all the new updates of the videos. And if you're not a part of our Telegram channel, do join today as we discuss daily what is the market view, how is the market going to behave that day and the few days going forward, and a lot of investing insights on a Telegram channel. You can join by searching my name on Telegram. So before we talk about Root Mobile, a little perspective on the markets in short. As you know, we have been looking at the resistance zone of 17,400 to 600, which is decisively crossed now, and now we are close to about 17,800. So we have become very bullish in the short term as well as long term, and we are presently following the strategy of buy on dips, as we are confident that this zone of 17,500 600 now, which was resistance earlier, will continue to act as support now, and global scenarios have slightly improved than before. Now coming to the Root Mobile discussion, these are the things which we'll discuss in the video. We'll briefly understand the business model of the company. We'll talk about how the chart has performed in the last couple of years or 3 years. We'll talk about the financial performance, only the key metrics. Then we'll talk about the reasons for the fall in share price, what is the outlook of the company going forward, how are the valuations of the stock, and what should you do as investors. So when we talk about the business model, the company is into the CPaaS space. Now what is CPaaS? CPaaS is communication platform as a service. So what does this platform do, or what does this company do is they have developed a platform for communication of businesses with retailers or individuals like you and me. Whenever you are using different apps in your daily life, like you're watching any movie on a OTT platform, whether you're shopping online, whether you're booking a taxi, so you get a lot of communication from that app. The communication can be in the form of SMS, emails, calls, or nowadays even on WhatsApp. So all these communication is managed by a platform which is a communication platform. So companies like this Root Mobile have developed a communication platform, and they are giving that platform on a subscription basis or a fixed fee basis or per transaction or per message basis to different businesses across the globe. So let's say you are booking a taxi through an Uber. So when you book a taxi, you start getting alerts as to where the taxi is, and you start getting when you register as a user, you get a verification SMS. So all these communications are through Root Mobile's platform or any other company's platform which is a part of the CPaaS industry. So CPaaS platform acts as a mediator between the app or the website and the telecom companies, because directly you can't get an SMS. You always need a telecom service provider to send a SMS. So whenever the communication is through SMS or calls, the communication is initiated through the original business app or website, then that is sent through Root Mobile's platform to the telecom service provider, which in turn sends it to your mobile. Now in this industry, you can imagine that in daily life nowadays, almost every app we use, almost every website we use is generating such communications. So the usage of such platforms is increasing day by day in India and abroad, and it is bound to increase for the next 5 to 10 years. So the opportunity size in this business is huge. Although there is competition, but the opportunity is huge. So a few words you should note here. It is a scalable platform. It is an omni-channel platform which can be used by different businesses. It can be customized and used by any business. So Root Mobile need not develop a new platform for every business. So there is a scalability in their business. It can be used across different industry verticals. So they can use it for any industry, and the same platform can be used globally. So for them, the entire globe is their customer base. So as it's a global company, they have already tied up with more than 280 mobile network providers. So it is not easy for any company to immediately start this business and tie up with so many mobile network operators. And Root Mobile has done it over a period of time, and there is some stickiness in between the relationship of these mobile network operators and Root Mobile. The company has presence in more than 20 locations globally, and they have more than 3,000 active clients. So their revenue concentration on selected clients is getting diluted day by day, which is reducing the risk in the business for the company. So when we look at the chart, the stock performance has been great. Immediately after the IPO, the stock gave a very good run up and crossed almost 2,250. But from then there was a sharp fall, and now the stock is sideways and consolidating for more than a year now, which is a very painful journey for the people who are already holding it. But you can as well see that as the earnings of the company are showing a steady growth, the stock has become sideways and consolidating, and there is a strong support which is getting generated in the range of 1000 to 1200 zone. Now when we look at the key metrics in terms of financials, we'll not be discussing the entire financials. We'll see what is important for this particular stock for our discussion as of now. In terms of revenue, the company has shown a very good performance. It is growing at an average rate of more than 25 to 30% every year, and the revenue of the company pre-IPO, which was somewhere around 800 to 900 crores, it has shot up to almost 3000 crores. So the company earlier, it was generating a yearly revenue. Now that company is generating the same revenue on a quarterly basis. So you can imagine the extent of growth and scalability in the business of the company. Now when we talk about margins, initially the margins were very higher. In fact, before 2018, the margins were as high as above 20%. But as the business has scaled up, as the company has invested in technology, as the company has faced competition from different players across the globe, as it is a competitive industry and there are larger players who are competing with them, the margins have slightly compressed, and they are ranging in between 11 to 12% at EBITDA level presently. So this is one of the reasons why the stock price has fallen. When you look at the return ratios, in line with the margins, the return ratios have also fallen. Now the return on capital is somewhere around 17%. So what you notice in terms of growth, there is a long runway of growth. The company is showing very good execution, and the revenue of the company is growing steadily and at a very good rate across the last 5 to 7 years. But when it comes to margins, the company is facing the heat because of the competition, and the margins have started compressing. But more or less now, to me, the margins look stable in the range of 10 to 12%. Now what is the reason for this fall in the stock price in the last couple of years is, earlier when this company got listed, there was a huge hype about the company, its business model, its moat, and several other things. There was a huge participation in terms of the institutional investors in the IPO, and post IPO also we saw institutional investors buying from the open market. So the stock was hitting circuits, and it was a very good rally from there. But later when the results came out, the people were satisfied with the growth in the company, but the margins started compressing. So the premium which was given to the stock, considering it as a very strong moat company, that premium got slightly wiped off. The second reason would be that the institutional investors who had taken positions before the IPO or just after the IPO, they gradually started diluting their positions from the open market. So whenever the stock gave a rebound, the stock witnessed selling, and then you see a downward trending chart. So this is not a company which is very unique and the only company in this business. There are no strong barriers of entry for developing this kind of platform, but we should also appreciate that building such a platform, making that platform, upgrading every year, adding new features, all this takes a hell lot of time, and for a new company to do this within a year or two, it is not so easy. The second thing is that Root Mobile has developed such relationships with a number of MNOs across the globe. For other company to replicate this, it will take a lot of time. So even though we cannot say that it's a very unique company, which this business cannot be done by anybody else, but doing such a business, developing such a platform, developing such relationships will take a lot of time. And even if more players enter the industry itself is growing very fast, and there is a huge headroom for growth, and all the companies can survive at a decent growth rate for the next 5 to 10 years. The market sentiment was also not very good in the last couple of years, which also was a reason for the stock being weak. And there are certain questions also raised on the promoter's integrity, as earlier there was a question on the old chairman, as he was not very active in the role, but later that chairman got changed. Then pre-IPO there were a lot of related party transactions, but post IPO, in the recent annual report, if you see, the related party transactions are quite less than before. The company recently came up with a buyback, and the promoters did not participate in the buyback, and later they diluted their holding from the open market. So these are several questions which are raised by the investor community, and that is one of the reasons why the sentiment in the stock has been a little on the lower side. Now, what is the outlook of the company going forward? If you see this industry itself, the global CPaaS market is growing, is expected to grow from the size of about $8.7 billion in 2021 to almost $34 billion in 2026. So you see that the growth in the industry itself is such huge. So automatically this will generate tailwinds for the players which are operating in this industry. The company is targeting a revenue of nearly $500 million, which is somewhere around 4,000 crores by FY24, so which is a very ambitious number. The company has been growing organically in double digits, even above 20%, and they have good free cash flow, good cash on the balance sheet, using which they are doing inorganic acquisitions, and then they are doing cross-selling of their business with the new company. So this trend will continue going forward also. The company is focusing on developing new products which are value added products which they can cross sell to the existing customer base. So it is easier for them to sell, and these products will also increase the margins of the company, which will lead to margin expansion. So such products are in the space of mobile identity management, which is focused on preventing the digital frauds in today's scenario. The second type of products which the company is developing is the firewall products, and these products also we have higher margin than the existing CPaaS business. The company is also looking at creating separate business units for different countries and appoint individual leaders and focus in the new management structure. For that, they might be doing some management changes in the higher level management going forward. So this will also create a lot of focus on the growth of the company. Now, what are the risks which you can face as investors if you are invested in the company? There is a talk that mobile network operators like Airtel have developed their own platform, and now they will directly tie up with other businesses like the Uber, Facebook, or any OTT platform, instead of they coming through Route Mobile. So this is something which is not easy for anybody to do, because the platform which Route Mobile offers has a lot of additional features than what Airtel does. And the app can tie up only with Airtel in India, but Route Mobile offers a basket of tie-ups together. Then in terms of competition, the space has intense competition globally, and there are bigger and stronger players competing with Route Mobile across different geographies. The acquisitions which the company is doing, if they are not able to integrate that business properly with their existing business, then there may be some risk. We should closely look at the margins of the businesses, because the margins should at least stabilize at the present EBITDA level of 11-12%. But if this downtrend continues, then you should get very cautious, as the margin compression will further lead to de-rating of the valuations of the company. So far, the company has been growing at upwards of 20-30% growth every year. You should closely look at whether this growth will continue in the future or not, because it is easy for a smaller company to grow faster. But when you reach a certain level, you may not be able to sustain that growth. So the slowdown in growth can be a risk for this company. And some questions raised in terms of corporate governance and promoter issues always remains a risk or overhang on the stock. Now, when we look at the valuations, when there was a hype on the business, then the company's valuations went as high as close to 11 times the market cap to sales. But there was a steady fall in the valuations, and the performance of the company also improved in terms of revenue, and now the stock is trading at somewhere around 2 to 3 times the market cap to sales, which is quite reasonable for a company having these margins and growing at a 20-30% growth every year. Now, what should you investors do? We'll categorize the investors again into two categories. The first one is the people who are already holding the stock, and the second one are the people who are wanting to enter the stock. So the first people who are already holding this stock from a higher level and are into losses. Presently, I feel the valuations are more or less reasonably priced, or the stock is fully valued. And whenever there is a small fall during the market correction, gradually you should average your position, because presently the growth of the company is continuing. The margins have become stable. The company is adding value added products for higher margins. So the company is clearly showing a runway for growth with a target of nearly $500 million revenue for FY24. So more or less, you are in a comfortable position to gradually average this stock and come out happily in the future. Now, for the investors who are looking at entering Route Mobile afresh, presently, as I said, the valuations are reasonably priced. So either you can wait for a small dip and gradually accumulate, or you can take a small position at the present level and gradually, in a staggered manner, you can keep building the position, having a close look at the every quarter results which are coming by. And if you are somebody who wants a 100% clean company, there shouldn't be any questions on the promoter or the corporate governance, then you should avoid this company, as there have been some instances or some gray areas in terms of corporate governance. But having said that, the sector is good, the company has a strong headroom for growth and the company is executing the business pretty well in the last few. One thing to note is that whatever we are discussing here, we are just discussing for educational purposes and nothing should be considered as a buy or sell recommendation. The views which we discussed during our discussion here can change subject to the performance of the company in the coming quarters. So this is about Root Mobile. I hope you like the discussion which I have presented in a very simplified manner, explaining the business of the company, the outlook and the risks. We have also discussed the valuations and our views about the stock. And if you want me to make videos on your favorite stock, do mention the name of the stock below. If you like this video, hit the like button and subscribe to the channel. Thank you for watching and have a wonderful day.